Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Lindsey Johnson, the president and CEO of the Consumer Bankers Association. I was excited for this conversation for a number of reasons, but in part because the very first guest on this podcast was the former head of the CBA, Richard Hunt, and I was excited to get Lindsey's take on what's changed. We had a great conversation about kind of what they've accomplished in the first period of time she's there, what they're excited for in 2023. And also the three big themes she had for me, which were really around fraud, the increase in fraud, what we can do both as a society and as bankers about that. The future of banking, talked a lot about digitization, where that's going, how branches play a role. And finally, fintechs, partnerships with fintechs competing in the space. Really wide-ranging conversation. We covered a lot of topics. I had a great time, and I'm sure you will find it very informative as well. So please enjoy this conversation with Lindsey Johnson. Lindsey, thanks so much for joining us today, and welcome to the podcast.
Thanks for having me, Jeff. Excited to be here.
Yeah, you've got the best microphone of any guest we've seen so far. So kudos to you. Well done, pro.
That's right. We amp it up a level here.
Well, I was looking forward to this because the very first guest on this podcast was the head of the CBA at the time. He was the very first person we featured. And now we've got a new head of the CBA. And here you are. So tell me a little bit about what does the first 6 months look like? What have you guys accomplished that you're most proud of? How has it been?
Well, it has been a really busy 6 months, let me tell you that. We've had a great opportunity to really advocate on some big issues for our members. I think one of the most exciting and one of the proudest moments for me is my first thing call to order at CBA was attending our annual executive banking school. We actually hosted it from University. It was our most diverse freshman class we've ever had. And so that really, it's a testament to our members, but it's also proof positive of some of the work that we've been doing within CBA to make sure that we are developing the next generation of diverse leaders for the industry. So really proud of that work. And then I'm incredibly proud of our team and the work that we've done to be ready for 2023. We've got a really busy year in front of us, and we've pinpointed some areas where CBA is going to lead and be the voice for the industry. And we've outlined a fairly bold agenda. So I'm really excited about what's in front of us as well.
What's on the agenda? Tell me more. You've whet the appetite. Tell me what's on the agenda for CBA this year.
Well, I think some of our biggest issues are kind of outlined for us from our members. I mean, the things that I hear about from them when I go around and meet with them are fraud. Fraud has been an issue that even the largest banks are saying they've not seen this level of fraud attempts in really ever. So that's been an issue of, top of mind. Fintech and just sort of what's the future of the relationship with fintech providers, the relationship of fintech providers and, especially those that are offering direct consumer lending services. How do we make sure that they are offering the same consumer protection standards as the banks are? And then also, the future of banking. And sort of what does that look like? And we've seen such a thrust into a new era of banking, and it's incredibly exciting. But what does that future look like? And how digital is this thing going? And really trying to anticipate kind of what's around the corner. With all this innovation, with all the technology, there's a lot of challenges that come along with that, including fraud. And so really helping our members be prepared for what's next in that space.
Let's dive into each of those a little bit. Fraud is, the most bizarre issue of fraud. I have to bring it up because it was in the news this morning of like the company that they bought over, was it that Jamie Dimon bought, that ended up having created fraudulent accounts. That's not the kind of fraud usually that you expect coming from an acquisition. But what are the trends you're seeing, and what are you seeing be effective for your members in dealing with fraud? Because it's certainly something we've seen an increase in, not just general fraud attempts, but targeted, specific, knowledgeable attacks on systems, which is really, scary is maybe the wrong word, but it's really eye-opening to see how targeted people can be, and not just generic fraud, but like, hey, we've looked at your systems and your approaches and your processes, and we think we've got a kink in the armor we're going to go take advantage of.
Yeah, it is sophisticated. It's state actors in many instances, right? And so but just the sheer number and the volume of fraud attempts and attacks is really alarming. And then the other side of this is the consumer element, right? And the scams that are occurring and going directly to consumers. So as much work as the banks themselves are doing to have all the necessary precautions, to have all the systems in place to prevent this kind of fraud and activity to occur, it's really difficult to stop it occurring at the consumer level. And so we've been focused on P2P payment and that kind of scam that's had a huge spike, and really, calling on government. Banks are spending billions and billions of dollars every year to educate consumers, to prevent fraud, to prevent these scams. But at the end of the day, we need Congress to really step things up. We need agencies like the CFPB, who has a mission to educate consumers, to really step in and partner with us and help inform and educate consumers. But a lot more can be done. We actually just sent a letter yesterday to the CFPB, to the FTC, to the FCC, calling on this wholly government approach to fraud, because it is very significant. These are state actors, and we need more work to be done across government.
Yeah, and you're right that it's so easy to think about fraud when you're in a financial services company as the attacks on your system, but the attacks on consumers, unsuspecting, sometimes less sophisticated consumers, they're really terrifying. And sometimes they use the brand names of institutions. We've gotten phone calls, but I got this loan from you, and you're doing these. I went we get them from people. People got a loan from us in India. I go, we don't operate in India. But people are using the brand features and the names and to build credibility, and then scamming people out of their money. And that's not within the bank's control per se that those features get used, but it certainly ends up influencing not only the consumers who get damaged, but the institutions whose reputations are damaged by the use of those features.
Absolutely. Well, and in our letter, we really call on the FCC to help us address those spoofing scams, because those are areas where it is incredibly difficult for the consumer. The consumer can do everything that they think is right and that they, know to be true, but it's just almost impossible to tell whether that person is a fraudster or not, because it's that level of sophistication.
Yeah, I feel like every consumer, my 12, 15 hours of annual compliance training of various sorts. I finished that. And one of those was the new, info security modules that we had added to our corporate training. And I went through some of those on if you receive an email with a link, should you hover over the link, click the link, or go to the website for the service provider directly? Those, and I kind of went, every consumer needs to have that level of, the companies provide it, but it's really true that understanding how to see and protect against those kinds of fraud is something that every consumer really needs to receive, even if we get it through the company. But I think it's important training, and we need to find a way to educate people, because it is a really big problem.
Absolutely.
Well, let's talk about the future of banking, digital. What do you see happening? What are your members doing that's moving? This feels like one of those. To me, I talk to almost every banker I talk to. You're right, same thing. They're all doing something interesting here. And it's one of those areas where I don't know that the answer is fully determined. People are trying different things, seeing different results. We're learning our way into what the best version of the future is. What are the innovations you're seeing that are moving the needle the most or having the most impact in your member base?
Yeah, well, one thing I would just say is that even though banking is one of the nation's oldest and most established industries, America's leading banks really view themselves today more as a technology company, or as much as a technology company, as a financial services firm. And so I'm really glad that I think we might be away from just moving the needle. I think we're thinking about banking and financial services in very new, innovative, and very transformative ways. And that's a really good place to be. As an industry, we've been talking about digitization for so long. When COVID happened, banks were really able to roll out this technology that's focused on helping consumers do their banking not in a bank, even to consumers who had never adopted technology to that point. So the pandemic thrust us there. It catapulted us in this direction. Think about the explosion of P2P payments that occurred, through and during the pandemic. That's just one example of how consumers and banks are thinking differently about, banking, payments, credit, how all of that's done. And what I see happening now is that banks are really thinking about technology in terms of solving problems for their consumers. So, whether that's offering other travel programs, financial wealth and wealth building tools, financial planning tools, much, much more in this space, anticipating their consumers' needs and the lifetime journey of a consumer in a very different way. And so that's extremely exciting. And I think the investments that they made, leading into the pandemic, and technology help banks be ready for that, for what we saw in the pandemic, which was a mass need to have banking and banking services available outside of the bank. I think the investments that they're making today are really going to prepare consumers for how to take advantage and manage their own financial lives in a much different, much more meaningful way, and have control of their own financial data. All of these things are really moving the needle, and not just moving the needle, but really kind of being transformative in the way that consumers use their financial services providers.
This wasn't one of the things we talked about earlier, but I'm really curious. In e-commerce, there was this kind of like COVID blip where things went massive, and it's kind of like, I would say, fallen back off to the extent that like there was kind of an ongoing adoption curve. It looked like maybe we had just jumped ahead of the curve, and then we've kind of gotten back on the curve where we kind of like we lost the momentary blip. We're continuing to see increased adoption of e-commerce versus physical commerce, but not that didn't like night and day, just like jump ahead 10 years of the adoption curve we thought. I'm curious if you're seeing the same thing in the banking world, or if you're, are we reverting back to something like an acceleration of digital usage for our consumers versus where we were, or did we really like take a permanent leap forward through COVID? Where I certainly know that like a lot of people who'd never done a mobile check deposit were calling me going, Grandma, how do I do? But then I went, what? So I don't think I'm going back to the branch to deposit my checks anymore. I've got a way to do it. That kind of digital became more of the norm. I'm curious, do you think we took a more permanent step forward in the banking world, shifting from the more traditional approaches to digital, or are we going to still see a more slow adoption curve and a reversion to where that curve was before?
No, I think that we took some permanent steps forward that you can never erase, right? We saw consumers adopt technology like we've never seen them adopted in history. And I think that the pace of this transformation is only going to accelerate as we've proved that this can be done and it can be done safely. I think that banks are really making sure that consumers have these different solutions. But one thing that I will say is true is that, it's not going to be this mass exodus from branches. It's not as if the branches are going to go away. I was in Texas last week meeting with a number of our banks. And while I was there, I saw some of my family, some of my friends, and one of them said he had never used an ATM before. It blew my mind. And I was like, how is that possible? And he said, well, the bank's right there. Why wouldn't I just go in? So some people, some demographics, just certain people, there is still a strong preference to look someone eye to eye and to actually work with a person for these transactions. And we're just, we're not going to see that go away for a really long time. I think we're going to be in this place of high tech, high touch for quite a while. And you see banks making investments in their branches, right? And a lot of banks, banks are very committed to their branch models. You see big banks actually opening up a comparatively large share of branches in LMI income and minority areas relative to the population growth. So I think that is a trend you see. And then you've also seen some banks open new branches in these growth regions like the Southeast, especially through the pandemic, where some of those trends have changed. I think that trend continues. You've got institutions like PNC who are thinking about it from a digital first national expansion perspective. And then they're still opening these financial solution centers in these new markets as well. So it's going to be a double prong approach, but I think we really kind of did some leapfrog on technology. And we also brought consumers who were really, not using and not adopting technology. They've adopted it and they're not going to go back. And so that evolution has occurred, and it's no longer a question of, if digitization, that's done. Now people are really thinking about, okay, what's next and how should we be thinking about technology in financial services going forward?
Well, let me ask you, talk about the investment in branches. And this is probably one of the most common topics when I talk to guests on the show, like what they're working on, what they're doing. And it's clear that nobody's giving up on the branch, but it's also clear that they're shifting how they think about the role of the branch in a world where so many of my transactional things are now enabled through digital. I don't need to come in to check a balance. I don't need to come in to ask some basic questions, maybe deposit a check. How do you see the role that branches play in the future, given that they probably won't be exactly what they were before, but they're probably not going away either? There's some new role, I think, that they're asked to play. And I'm curious how you would describe what that new role and what kind of how they fit in the digital plus high touch model. What's the role of the branch in this world?
Well, I almost think of it as, what do I look to a person to really help me do? That technology can help me and get me to a certain point, but I'm looking to a person. I have a couple of different banks that I use. One of them kind of has one of the cafe models, and you can probably immediately guess who it is. And when you go in, from the barista to the person that's standing at the door, will talk to you about the card that you've got in your wallet, and is that right card? And they will talk to you about some of your financial need, your financial planning and what's in the future. And I think that is, largely what the branches are going to be transitioned to. It also will serve as that point of contact for the individuals who have not used the ATM or who are uncomfortable, with some of the
Yeah.
technology. There's still going to be that population of people that want to go in and do some of these transactions. But I think that, there is a clear recognition that the branch is going to be much more, and it's going to be a point of access for understanding consumers better, for them to have strategic partners with their bank. And that's going to really kind of revolutionize the way that people relate and have that relationship with their bank.
I'm curious now with CBAs involved, because one of the things that occurs to me when that happens is the nature of the job for the branch employee changes.
Yeah.
Like a lot of times that was a more transactional, it was kind of an operational role for in many instances. And now you're talking about much more like advisory, strategic conversations with your clients, which means a different kind of education for a different kind of skill set for those employees. Have you seen members investing in? Is that something CBA is investing in, helping figuring out how do we train the branch employee of the future for the changing role of what their job is going to entail and require of them? And I think it can be actually quite exciting for the employees to have a kind of a higher level set of conversations with the clients, but also I imagine quite intimidating for those who are used to a more traditional approach, a more traditional job in the branch.
Yeah, well, again, not a one size fits all. Different banks are thinking about it very differently, but we do have a branch banking working group within CBA where we're talking about, talent and sort of the evolution of talent. And this is a big piece of it, right? I don't know about you, Jeff, but I've received those phone calls from my bank that say, hey, we see that you've got this product and we want to make sure that it's the right product for you. We see that you are looking at these different funds, and now they're offering these different avenues, these different platforms for investing, even right there on their own website. So I just it becomes extremely easy, too easy not to do it. And they are engaging by phone right now, but I think that that's going to become more and more in person. And so that's just one more avenue for them to engage and build that relationship with that consumer and really identify the consumer's needs even before the consumer identifies it. This person reached out to me 2 weeks ago, and your initial reaction is, okay, I got to get off the phone. This is almost like a sales call. And it wasn't. She was checking in on something I had, been trying to do online. And she said, how is that working? I see that you've got this product over here. And then I had two questions. I said, let me follow up with you because I've got two questions I need to get answered. And now I've got her contact information. I'm reaching out directly to her. So I think more and more banks are really kind of transitioning into that model of it's a relationship that can extend beyond just the branch, right? They're seeing me when I log in online. They're catching me if I walk in the door of the branch, but it's all that same high touch aspect to it.
And I love that kind of helping you find the right products. I do think it is easy when you work in financial services to forget how rarely most people think about financial products and how often they don't have a great understanding of all the different offerings and what the best solution is. And we're all sitting there kind of in the middle of it all the time. And it's easy to like, you don't buy a car or a house or set up a retirement account very often as an individual. You do it kind of once.
Right.
And so they're just not as well informed for good reason on what their options are and what the best solution is. And that kind of helping people navigate the menu of options that they're often not even aware is there is one of the really critical roles that you can play, and a great place for that high touch relationship oriented approach.
Absolutely.
All right. You mentioned a third priority. We talked about fraud. We talked about the future of banking. We talked about fintech. And it sounds like you got a little regulatory approach and kind of level playing field, but also I imagine some partnership between fintechs and where there can be, the ability to work together on driving this digital future and partnering. So tell me a little bit about your thinking in fintechs generally, like what you guys are thinking about at CBA, and then how fintechs like ours can work better with your members in terms of driving that future of banking for the consumer.
Yeah, I mean, look, Jeff, you all know this all too well. I mean, customer expectations right now have risen to the point that companies, including banks, have to constantly focus on updating and accelerating that process, their processes, any way that they can become more convenient to their customers. And so you see the nation's largest banks spending, we all track that, but literally billions of dollars every year to accomplish that convenience, to anticipate what consumers are going to demand next. For small and medium-sized banks, it is, partnering with fintechs is one of the most meaningful ways that they can actually compete. And so in many ways, those partnerships are absolutely essential for these smaller and medium-sized banks. I think that we are going to continue to see those partnerships play an incredibly important role. I mean, Upstart's partnership with one of CBA's members, Berkshire Bank, great example of this, right? I mean, you all are helping Berkshire really achieve their goal of making credit more accessible to LMI communities. And so we see more opportunities for that. I think for larger banks, you see a lot of fintech partnerships outside of just the banking and digital banking realm because they can do a lot of that themselves. But you see them looking to other firms like travel. And, one of our member companies, our large member companies, just bought a fintech firm that's focused on food delivery. I mean, really outside of just digital banking. So those are some things that I think we'll continue to see. And then, I think for all companies, the next phase, COVID was a big, reason for companies to really invest in digital and really partner with fintechs. You saw a lot of that, kind of propelled through the pandemic. I think the economy is going to be the next big pressure point for adopting fintech and AI. I mean, this is more of a prediction, but two equally important forces at play. First, you've got a looming likely recession, possibly this quarter. And in normal times, you'd think of that and you'd automatically assume layoffs. But given this recession is actually in part because of the Fed's response to the services inflation, we've got a very, very tight labor market, as everyone knows, a shortage of workers. I think you're going to see CEOs thinking about it both in terms of cutting costs and also using technology to support and actually do some of the things that they would otherwise have some of their, in a normal labor market might have people do. And so it really is going to help them fulfill some bigger strategic goals that they're going to need to fulfill coming through this next phase of the economy.
Well, we could spend a whole podcast talking about the economy and what's coming. But I don't know. It feels like a fraught space to go. I hate making predictions about the economy because I usually end up being wrong. It's not my area of expertise. But you did mention in there AI, and I'm curious your thoughts on the impact of AI, the state of AI, and particularly, where the regulatory landscape sits. Because it feels like, at least to those of us who've been in AI and financial service for a while, an area where we see a lot of opportunity, but not always as much clarity as we might want on the rules, regulations, how traditional rules like fair lending laws apply in the context of AI. And it feels like a huge opportunity to better serve the consumer if we can get clarity, and yet not always clear what the rules of the road are in the context of the new technology. So I'm curious what you see as the opportunities for AI, and if you agree with me on the kind of the helpfulness that some clarity might provide in terms of what the boundaries are, what the policies and rules and regulations are around that.
Well, I think especially in this post, PPP era, banks are really, I hear directly from our members that they're seeing AI and the promise of machine learning as a really very meaningful way for them to be better informed about how to make small business lending decisions, for example. It helps them minimize our risk. It reduces incidences of fraud. But we also have a lot of conversation internally about some of the comments and the discussion that's happening at the federal agency world, particularly at the CFPB, where there is discussion about discrimination in AI, and there's almost this requirement to prove that discrimination didn't happen because of AI. And that becomes a really difficult thing to prove. And so understanding your models and understanding the technology behind it and the inputs and the factors that go into it and how, anything might have been either discriminatory or led to an adverse outcome, is something that I think everyone's trying to understand, and how you grapple with that and how you prove it. And so, while everyone's got the same goal, no one wants to have discrimination in a model. And many of those different factors don't take into account, the protected classes at any extent. If there is an outcome that's adverse and an institution has to prove that there wasn't discrimination because of the factors, that burden could really have, see financial services take steps back away from AI and away from this machine learning. And I think that it actually will have a huge detriment on consumers, because the goal is to be able to extend credit access in a very measured, very, a targeted way that helps bring more people into the banking system. And so I'm a little concerned that we, maybe heading in the other direction for a time being. We need some ability to participate in this space, to have conversations, to have clarity from the regulators, so that institutions can use AI and technology in a way that helps consumers. I'd love to
Yeah,
get your thoughts on this. I mean, you all, I know you're
we,
big in this space, so.
yeah, we are big in this. I mean, I agree wholeheartedly. I think there's such opportunity. One of the things that's easy for people to forget is that in a world where models are somewhat imprecise, which is how I would describe a traditional credit scoring approach, the people who are most hurt that are left out. I mean, when we move up a credit score requirement, let's just say, as opposed to using a more sophisticated model, that disproportionately impacts communities of color, traditionally disadvantaged communities. Definitionally, traditionally disadvantaged communities have lower credit scores. And so those things naturally, when you're using more modern techniques, machine learning, AI, however you describe it, to augment, to get more accuracy, that accuracy brings in people who have traditionally been left out, which is exactly the consumers we want to help. And so I certainly understand the need. Nobody is looking to create bias. And there's the interesting element that I had to learn about in financial services of disparate impact, where it's not really about the intent or the usage of data in the model, it's the impact. And that it does leave this, I think, lack of clarity of when are you doing the right thing or the wrong thing? When are you crossing a line? How do you measure if there's disparate
And where's
impact?
that burden of proof, right? Yeah.
Yeah,
How do you
and is
prove?
it justified? And I often think we also forget that, like, sometimes I compare AI models to, if you think about how a lender really uses it, they go, well, I used to have a credit minimum of X. Now I'm going to reduce that by 60 points and use AI to help me find the right people in that segment. And if you go, well, you can't use AI, well, then I'm just going to go back to having the old credit minimum. And then they often allow underwriters to make exceptions. But now, the level of rigor expected of the AI policy making exceptions in that 40 or 60 point credit score band is very different than the human underwriter who gives you a thing, but there's not a statistical measure of, is that being done equally? There's kind of the ultimate black box in some ways is the human mind and judgment, right? And that's, I think it's easy to forget. And I don't want to sound defensive or like we don't think these are important issues. Like, they're really important issues, but I think it's easy to lose sight of the benefit that these models can bring to people who have not traditionally had access to credit. And that's important, and providing clarity, because you're right. There are very few institutions more risk averse in certain ways, particularly from a regulatory point of view, than financial institutions. And so when there's lack of clarity, they go, oh, I like it and I really want to do it, but if I can't get comfortable that I'm not going to get in trouble for it with my regulators, or at least what questions specifically I need to see what kinds of answers to, then I'm going to have to take a wait and see approach. And that, I think, is a real risk of us taking a step back from where we've been. And I think that would be to the detriment of both the financial institutions and to the American consumer, which makes me sad, but we'll keep fighting the good fight on that front.
Well, and the pendulum swings, right? And so after the financial crisis of 2008, it was like, we don't want any discretion. We don't want, we want people just to follow this certain credit box. And then it was like, well, maybe this credit box isn't working. It's not getting to the people that we want it to get to most. And so how do we underwrite those people, not using discretion of a human that is going to be filled with, even unintentional bias, errors, other things? How do we use technology to really more precisely underwrite these individuals? And so that's the goal. And again, unfortunately, it feels like we're kind of moving back in this other direction on, moving away from that model and that intent and back to discretion, which, has its own issues.
It is. And I do think at some level, we have to, as a society and at the regulatory level, grapple with the issue of like access versus this like definitive nature or certain kind of rules you won't follow. Because you go, well, we need to have more certainty on these rules. And you go, well, but now you're denying all these people I wanted to have you approve. You go, well, yeah, that's the rules. So, we got to find a way to balance those two things. And I do think it's possible, but it's not obvious and it's not trivial to do. So I don't know, I'm optimistic that there's at least goals on both sides were aligned. Like, we want to serve more consumers. We want to accurately assess risk. We want to lend as broadly as possible while being safe and sound at the banking level. And I think AI can help us get there. And I think there's some hope. There's some things that are said that make me take steps back. But a lot of the working documents, the actual regulatory examination guidance, things like that, tend to have pretty thoughtful, I think, approaches to these things. And I think that's gives me hope that we will be able to find a middle ground and kind of balance these two objectives.
Agree.
All right. Anything else we were supposed to talk about today, Lindsey, that I forgot? Anything I should have asked you about and didn't? Because I got my 3 closing questions, but would like to ask if I forgot anything that you thought we should have covered today in that conversation.
No, I mean, we covered kind of the gamut. So unless
I
there's
think we covered quite a bit. Yeah.
anything else that you want to cover, I think we're
Well,
good.
I got three questions. I close the podcast out with all my guests, so I'll throw them at you here, and then we'll call it a day. So the first was always, what's the single best piece of career advice you've ever gotten?
Oh man, I mean, thankfully I've had some really good people in my career journey that have been open. One thing that someone said to me was be ready and be open. And they said it just as short as that. And I've heard you use the term, Jeff, accidental banker in other podcasts.
Yeah,
And I think that most of us are not in this work because when we were 5, we said, we're going to declare our career path as a banker or, in mortgage or whatever the case may be. So it's really, kind of that Seneca quote of luck is where opportunity meets preparedness. Be prepared, ready yourself, but be open and really take advantage of opportunities that come to you. Maybe a challenge that gets presented at your place of work. Take it on. Be open to those new things.
be prepared. I love that. It reminds me of the Steve Jobs commencement address at Stanford, where he said you can only ever, live a career, a life forward, but you can only ever actually understand it looking back, because you don't, the path only makes sense when you look back at it. It never is obvious to you up front.
Absolutely.
I think that's similar. Be prepared and be open to what those opportunities are when they arise. I love that. All right, what's your Consumer Bankers Associate? What's the best piece of advice you've gotten about the consumer banking space? I imagine you've had a few, so this might be a hard choice.
Actually, you know what? I mean, I've had some good feedback, and some of our members, all of our members have been tremendous. But one thing that one of our members said, one of our board members actually said, is we can never lose sight on who's on the other side of that transaction. And we were really talking about, the future of banking and what it's going to look like and how the industry needs to be prepared and, all the steps that we'll have to do to from a security and a fraud prevention and all those other things. We cannot lose sight of who's on the other side of that transaction. And if you put the consumer first, if you put yourself in their shoes, if you think about it from their perspective, those are the banks that are doing the most tremendous work, right? They're out in front and they're adapting to what the consumer's needs are. And consumer lending is a tough business. It's a tough business to be in. And so those folks who can really focus on what's best for the consumer and adapt their business to that is always going to be best positioned going forward. And from an advocacy perspective, that's what we want to do as well. We want to really focus on the consumer. And at the end of the day, that'll make us stronger as an industry.
So let me ask you one follow-up, because I love this focus on the consumer. There's been a theme running through the show. But I often find that it's easier said than done. Like it's there's this phrase that's been coming up a lot for me recently, which is like simple but hard. Right. It's not complicated advice, but it's also not easy to execute on. And I'm curious if you have any advice or stories or things you've learned about how you actually do that. Because it's so easy in this business to get caught up in loss rates and return rates and, ratios. And you kind of open the spreadsheet and twist the knobs a little bit here and there to try and you do lose sight of the person on the other side of the transaction, the human beings you're serving. And so I love the advice, but I'm curious, do you have advice on how you actually do that, like day-to-day tips or practical ways to keep that consumer, that other side of the transaction front and center in your thinking?
Well, look, I'm not consumer facing in my role, but I see it being done by my members. And then in my role, it's very similar. I mean, I'm advocating, we're, creating a number of different opportunities for our members to engage directly with us. I could not be effective at my job if I'm not in the market meeting with my members, hearing directly from them. And so I think one of the best things that I see our members do is be in the market, be, on the front lines. I mean, that's one thing I love about CBA is we are the Consumer Banking Association. We are, our board is the head of the retail business, and they are on the front lines with their, with their team, really hearing directly from consumers. What are the challenges? What are the bottlenecks? What's their next thing on the horizon, and how can they use their bank to address some of their own challenges in life? And so I think just being in the market, being in front of your consumers is something that's probably the best way to really understand how to do something that sounds pretty simple, but is actually, in fact, very, very difficult. You really start to understand how to do that when you're directly in front of the consumer.
Yes, you do. All right, last question. What is one bold prediction for the future, consumer lending or generally? One bold prediction.
Oh, well, look, I've spent a lot of time on this issue on fraud. So I'm going to put it out there that I think one of the next things on that horizon is the use of biometrics. And we see it some. There's a couple of ATMs where you're using fingerprints and you see a couple of institutions wading into that water. I think that there is going to be such a focus and a recognition that we have to do more on security. We've got to continue to move in this direction. And, a lot of consumers have already given over their biometrics, myself included, to Clear. And if it's good enough to get you on an airplane, it should be able to, and open your phone, you should be able to do the same thing with your bank. If you're at an ATM, if you're trying to verify a payment, a P2P payment, for example, there's a lot of ways that we can, that might be able to be utilized going forward. And I think that we might see more adoption of that.
That's a fascinating prediction because it is true that we keep putting more and more burden. I mean, a biometric is easy compared to please give me a 64 character password with an uppercase and a lowercase and a special character and a number, and then give me a second factor authentication.
I don't remember any of those questions. I ask you the question and I literally, I can't remember any of the security questions.
I know, and I remember, and it's like, that's the incorrect answer. I'm like, no, it is not the incorrect answer. Definitely the correct answer.
What would have I had said that day?
Yeah. Maybe I answered for my wife. Maybe it was my wife's first grade teacher, not my first grade. I forgot what I did. So yeah, that's an interesting one, but it would be certainly, it's a lot easier to open my phone now than it is often to log into my bank account. Because, I can use it just looks at my face and knows. So that's a very interesting prediction. Love it. Lindsey, thank you for making the time to join us today. This was a fascinating conversation. I really enjoyed it.
My pleasure, Jeff. Thanks for having me.